Good evening, good morning, everyone. Thanks for coming to this webinar. In fact, we call this session a showroom. It's slightly different from educational webinar where we introduce some techniques, some tools, we do some live market analysis. In this case, we will introduce a specific feature of our website. But we will take the chance, since it is about a common theme here, the Commitment of Traders report. We'll take also the chance to introduce you a little bit what the CoT is, what can be done with that. Okay, you are looking at the FXstudies environment. Right now, in the same window as I am. This is the modular version of our website, so to say, where we have a lot of tools in a customized environment, so to say. You see that this environment is organized by tabs. In this case, I've organized it this way, where we have a lot of indicators from the most basic price feeds and rates comparative up to momentum, trend indicators, volatility, patterns, and so on. Okay, I've organized it in a personal manner. This means if you never been to FXstudies, by the way, FXstudies you can access if you are logged in. You just go to your username on the top right and my FXstudies and my Forex studies, and you get there. For the first time, you will have some tabs per default, and you can just rename them and add the widgets that you may need for your analysis, for your trading. The studies, so to say, or the tools are organized in different categories. And today, specifically, we're going to introduce you to some sentiment tools, which are the CoT based studies, or studies based on the CoT data. Okay. So this is the FXstudies website, or section, so to say. And by clicking here on the sentiment tab, we'll have the studies that we will look into today. By the way, I may share this table with you, and you may do the same with your once you create a tab or any of the studies that are available here. You may share them with others just by clicking on share. You have this link, which I may post here, for example, in the chat. And by sharing with you the entire tab, if you click on it and you adopt that tab, you will have the same tab, the same sentiment tab with the same widgets, so to say, as I have right now, with the same settings and everything. Now, once you have imported that tab, you may just start clicking on the studies. You may move them around. You may change their relative position, and you may also change the different settings in each of the widgets. Okay. Fine. So. Just a few words to the Commitment of Traders report. The CFTC releases the features and options positions of traders for free each week. The CoT, the Commitment of Traders information, is independent of price data. That is, it's not derived from price data, as many indicators that we may use usually in the spot FX trading. This is not derived from price data, and as such, the CoT metrics take on a whole new level of importance. Okay, it would be as for a comparison, it will be obviously for a technical trader always of secondary importance. Everything that is related to activity and volume. But nevertheless, it is an important piece of information, and if no other reason for the fact that it is not derived from price itself, and conceptually, thus it is not related to other indicators. Okay, but examining the raw data in the CFTC page can be tricky. It is just a maze of data which in and of itself is terribly difficult to read and understand. We may look here at this is the source page, the U.S. Commodity Futures Trading Commission, and specifically the data that we draw to analyze FX markets is under the Chicago Mercantile Exchange, the futures only short format. This is where we draw the raw data from each week. Okay, as you may see, you have several contracts here. At the top of each contract, you have the what is the tradable. Okay. And further along, you have cheese, and here it starts with FX futures. You have the Russian ruble, Canadian dollar. Okay, so for let's say the Canadian dollar as an example, this would be the weekly report. All this data that is contained here, and as you see, there are different groups of trader, non-commercial, commercials, and then the non-reportable, and you have a series of numbers, long, short for each of the group. You have open interest as well here. We'll cover briefly these aspects, what each group is, and what the numbers mean. But what we have done here at FXstudies is to simplify the process for understanding what all the numbers really mean. We have created a series of CoT data or CoT studies at FXstudies, and not only do we show the data in a graphic form, but we also process it in several different ways using different formulas. One thing is just to plot the data as it is and build a continuum out of that, and another is to take that data and to apply different formulas and extract different information from it in order to extract more information from the same data. Okay. This data is released every Friday, and it takes into account the previous Tuesday's contract. So when information comes out there are already 3 business days after the actual transaction takes place, and as such, it's in order to be useful for a trader. Usually, it's used for long-term views of the market, long-term position traders, or as a filter for your intraday trades. You might take as a filter, as a directional filter, whether to be long or short in a specific market, or not only as for direction, but for the timing. When is the best moment to take action? And this usually is associated with some aspects like extreme positioning, like the flipping of a certain groups of traders from net long to net short, or vice versa. So as a timing tool to be also very, very interesting. Okay, for direction and timing, even if you have a short-term approach. Let's go back here to the CoT data. Okay. So perhaps we may just cover a little bit the different groups that we have displayed in the CoT. There's 3 groups that we saw here: the non-commercials, the commercials, and the smaller non-reportable. The commercials, what we see here in the middle are called the large hedgers, and they have a preference of buying on weakness and selling into strength. That is, they are negative feedback or counter trend traders. They are not traders in a sense of someone looking for absolute returns, but rather to hedging some positions they have in a physical commodity or market. Okay, these groups are usually companies that trade with a physical commodity, and as such they trade without emotion. They are not speculating with a futures contract. They are just hedging. And as such, they're hedging risk, they have a long-term view, and they only change positions when the price deviates a lot from what they consider fair value. Okay. So the typical commercial trading pattern is to average down in a bearish market or up in the case of an uptrending market. We may see we may put this first, perhaps. Okay. As you see, I can switch positions between the studies. I may also switch columns. So this is just you may customize it to your own analysis process. We see here the different colors: red for commercial, blue for non-commercial, and green for the small traders or non-reportables. Okay. So as for the commercials, the hedgers we're speaking, this is the red one, and we are currently looking here at the dollar index. So you see, you may change the contract here. These are the contracts that are available. Okay. You have bond, 10-year, 5-year Treasury notes. You have several major currencies, and you have commodities as well. Gold, copper. You have some exotics, let's say the Mexican peso. You have some indices as well: the Nasdaq, the Nikkei, the Russell. Okay. Also silver among the commodities, and also the S&P 500 and dollar index, and also the forward volatility. You have the VIX futures. Okay. In this case, we are looking to the dollar index, and we see the positioning here. We see how commercials are net short. We see the zero line here. Below the zero line means that particular group is net short. There are more short contracts than long, so to say. And on the top side, above zero, the groups that are printing in the positive territory are net long. Okay, so we see usually both commercials and non-commercials go opposite. Okay, so the commercials, like we said, are hedgers, are negative feedback. So if the market is going up, they are selling. Market is going down, they are buying. So there is a counter trend approach to the price action, while the non-commercials, and also called large speculators, they are trading with the trend. Yeah. So in case of non-commercials, their sentiment is a price continuation indicator. It is said that it's more reliable as an indicator, as it captures traders' position in a specific market, and because they behave like positive feedback traders, means if price is going up, they are buying into that trend. If price is going down, they are selling. So this is a kind of positive feedback exhibited by speculators, by non-commercials. This means also that as a group, they enter late when the trend is already underway. They suffer through all pullbacks during the trend, and finally they exit late when their algorithms are convinced that the trend is over, causing them to lose heavily at major trend changes, especially when considering they usually have highly leveraged positions. These are speculators, but the fact that they are late in reacting to trends is not to be misunderstood. They are not losers in that sense. It's simply that the group, as a group, they do poorly as compared with more optimized possibilities that we may have as an individual traders. Okay, so it's this data here and the way it is processed here in these studies is not for us to mimic what a certain group is doing, or to take the opposite position of let's say of the hedgers, or mimicking the speculators, the non-commercials, but rather to find some aspects that we will cover shortly. So the large speculators, or the non-commercials, are associated with superior forecasting ability, despite their slow reaction to reversals to changes in trends. Therefore, you want to know if they are net long or net short, and especially avoid trading against this group. The net positioning is perhaps the study that you will find there where you can have CoT data. This is the chart that you mostly will find. This is the net positioning, and this is basically the difference between, let's say, we are here looking at non-commercial in the Canadian dollar. It's the difference between the short and the long, okay, or the long and short. Okay, you take the difference between, for each group, let's say the commercial, you take the difference between how many contracts long, how many contracts short, and you can see here, for example, commercials in Canadian dollar, they are net long. There are more long contracts than short contracts. Okay, and this can be each week there is the data release, and with time you can build this continuum. Our history goes back to 2008, so you have different historic or recent historic periods to compare with, in terms of extremes between the groups, in terms of absolute positioning among them. And the way these tools can be used is simply by zooming to have a more detailed data of what is happening today. You have the most recent data always at the right edge of the chart. You can see by hovering the chart, you can see the actual numbers, the actual net positioning of each group. It is colored, so easy to see, and you may zoom to have that to have the weekly detail in a more visible fashion. Okay, you may also zoom out entirely and see the entire history of the data. We have a question here from Bob. I'm on FX3 homepage. Where do I find the report? The CoT data you can find under the My FXstudies. That is, if you go to the top right side of the web page, by hovering your username, the first link is My FXstudies, and when you get there, you get into the FXstudies, and then you will have to add you go to sentiment tools, okay, and here you have all the CoT data that we are going to see in this session. Okay. What I've done before, if you don't have the link, I just post it once again, is I've shared with you the entire tab as I have it here. sentiment tab where I have all the CoT studies. Okay. In the future, we'll have more sentiment studies, from a different nature, and they will be located under the same category. Okay. See that? If Genius is asking, so for example, where we can say that the large speculators short the dollar. Short the dollar, you mean probably? The large speculators, they're or the non-commercial, so to say, is the red one, and if they are below the zero line, the zero is the middle line here. If they are below zero, means the blue line, the non-commercials, means that the large speculators are net short. For example, here in the dollar index, they have been net short in this period here. If I hover, you lose the sight of the chart, but you see these periods where the blue line gets below the zero, and here once again. Okay. And right now we have them not at an extreme, but still in positive territory along the dollar index. Okay. Yes, CoT data is also available for dollar index futures contracts, and that is the one we are looking at right now. Okay. So CoT net positioning would be the most basic study that it's the first translation from the raw format into a graph form would look like this. Then we have another piece of information within the raw data, which is the open interest. We have it here, the open interest, and the open interest, which is featured under this second widget here. You can see the open interest for the British pound in this case. And it's plotted together with a price chart for cable, for sterling dollar. What is the open interest? A futures contract is said to be open when it has been entered into and not yet liquidated by an offset transaction or fulfilled by delivery. So those contracts that are open are referred to as open interest, and the aggregate of all open interest is equal to the aggregate of all short open interest. Means if you sum here, the open interest will be, if you sum together all the long positioning, then you'll have this number, and you will get to the same number if you add all the short positions. Okay, so it's the number of contracts outstanding, outstanding contracts. Okay, at any one time in each delivery month. It's held by the longs or the shorts. It's not the total of both. Okay, not the total. And the open interest is an excellent tool in estimating the liquidity of most contracts, and as well is also a certain correlation to volatility when a certain market attracts a lot of new contracts. It's different from volume. Volume would be the number of contracts traded during a certain period in a specific futures market, delivery month, and but this is the contracts outstanding. Okay, the contracts outstanding. So you may have the open interest rising at the beginning and declining at the expiration of each contract market. but this is a minor consideration. So an expanding open interest confirms that there is interest in that existing trend. If market price is going up and there is an open interest also increasing, means that there is an interest. There are new contracts being opened in that market, and it's as with volume analysis, it is a confirmation of that trend. So an expanding open interest during an upward trend suggests that buyers are creating more new contracts than old contracts. And when an upward trend continues but open interest decline, means old contract holders are selling and observing any new buyers. And it suggests that the trend may soon reverse direction. So when we say new interest, new open interest, this it's perhaps a little bit abstract in the sense that it's different from volume analysis, slightly different, because new interest in a market is the result of new buyers and new sellers meeting. Means when you have a new buyer, someone is coming to the market and is a new buyer. He or she wants to buy, but has no commitment in that market yet. It's out of the market and comes into the market and buys. And on the other side, there's a new seller, someone who is out of the market, has been standing aside and comes into the market as a new seller. And this new buyer meets the new seller. You have an increase in open interest because there is a new contract being generated for that new transaction, so to say, between that new buyer and that new seller. Now, if you have a new buyer, someone has been out of the market, comes in and says, I want to buy, comes new into the market and buys from an old seller, means someone who bought previously and sells now to get out of the market, and that new buyer observes that old seller, there is no change in open interest. So open interest stays the same. There is also no change in open interest if an old buyer, someone who bought into a market, is in that long position, and he wants to get out of that position, wants to liquidate that position, and looks for a seller. And a new seller comes in. That new seller comes in and observes. And observes that buy position, so there is no change in open interest. And if an old buyer, someone who already bought, meet someone who already sold, and they get together, means an old buyer meets an old seller, there is a decrease in open interest. A decrease in open interest because there's one contract is destroyed, so to say, is offset. Okay. So increase in open interest, like we have a spike here associated with now in hindsight we see that it was associated with a bottom here in cable. We see here a spike in open interest in sterling. Okay. In sterling contracts. Okay. And here again, you have in this widget you have several options. You may compare or not with the price chart. So if you just need to have to visualize the open interest, you may choose. Okay. You may also combine a commodity and plot. Let's say scroll, compare with pair, yes, and you may compare it with any of the currency pairs available. Okay, but usually the most interesting is obviously to compare it with the underlying price action. Okay. You see, there is one important note that I wanted to share with you, is that the fact that, for example, we have here in the dollar yen, we have the dollar as a base currency, where before in cable we had the dollar as a quote currency. This means that in other words, in the futures market, you have always the currency exchange futures using the dollar as the base currency. It means that if you are assessing, for example, the Swiss franc, for the Swiss franc, it shows if an open interest is net short, for example, for the Swiss franc, means that it's bullish sentiment for the dollar Swiss, because in the spot forex market, in the case of Swissy, the dollar is on the side of the base currency and not the quote currency. Okay. The same as here. So in yen, it would go, if you, for example, you have here open interest for yen, and you may see that the relationship is a little bit different to a pair where the tradable contract is on the base currency. This is just a minor note that one should take into account. Okay. Another way to I think we have a few questions here. We followed CoT for a very long time, and it takes time for a large accumulation, right? When speculators are holding their largest longs in years, as usually isn't any more buyers left tipping you off to a top. Correct. It's very, very spot on. Mm-hmm. Also, when commercials buy a lot, it's usually tipping you off that they think prices are cheap. However, it usually takes some time for prices to move because speculators have to step in and get trend going. Mm-hmm. Correct. Yeah. Good for trends. However, as a short-term trader, you want to trade pullbacks within the main trend. Although CoT is great when the trend happens, then has a large pullback. That large pullback usually ends when the commercials came in strong again. Absolutely, absolutely. Mm-hmm. 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 We wanted to use this webinar as something very basic, more to introduce the widgets as such. Like you have on our page, you have different reports using that information. I may share them with you. This is one of the reports that are recently produced by FXstudies each week, based on this data and the studies that we are seeing here at FXstudies. I may share with you the link for this report, and there are also reports on CoT data delivered by external. For example, here this one from Global FX. I give you here the link so you can just follow them. More or less each week they are published, and all these reports take information from CoT reports. This one from AG Italia is they publish different types of. Sorry, it's not this one. I wanted the link. Sorry. They publish different types of of reports. Some of them use the CoT data. These are the ones that I most follow. There may be other ones who occasionally use CoT data as well. That you may also find them using perhaps the tags, if they are correctly tagged. You will see here the sentiment tag or the CoT tag. Okay. Moving on to the next study, the CoT BuySell Ratio. This is basically for each one of the groups. What is done here is to see the proportion between longs and shorts for each group. Means if you have an extreme positioning in the net positioning, you have some of the groups in an extreme net position, and you want to compare what is the quality. You want to assess what is the quality of that extreme positioning within that group. You may look into the difference between the longs and the shorts within that contract. Means maybe they are in an extreme positioning, but the difference between the buyers and sellers is not that large as it has been in a previous market extreme. So basically what we are taking is, if I go here to the raw data, we are taking the difference here between the long and short. For example, here for non-commercial, we'll take the difference from long and short, and besides of calculating the net positioning, we would calculate here in a form of a ratio what is the difference between one and the other group. Okay, because since open interest changes, the number of contracts changes, you may have an extreme positioning that is not associated with a very wide difference between longs and shorts. And this study, the BuySell ratio, helps you take a little bit more of information out of that data. Okay. So when you see there is more distance between the lines here on the chart, means that the difference between the buyers and sellers within that group is higher. Okay. Okay. So the higher the number, so to say, the higher the number, the higher the difference between buyers and sellers within that specific group. And then you may also want to have a look to a specific group, commercial or non-commercial. We will let small speculators here out of the widget for both the big groups. You may look into the amount of long and short contracts for each one. So again, it's the same information like we have here for one column and the other, but here it's before processing the net difference or a ratio. This is just the raw data, so to say, plotted into two lines. Okay. And yet another way of visualizing the CoT data is in a form of an oscillator. Means what it's doing is for each of the groups, commercial, non-commercial, and non-reportables, it compares the actual number and puts it into an historic context and compares the current positioning in relation to extremes, both long and short in that group, and creates a sort of an oscillator, very similar to how a stochastic or RSI would be constructed, taking a series of historic prices and calculating if the current price is closer to the maximum or minimum during that period, for example, and it gives out a kind of oscillator for the different groups. Okay. This is again a different way to look at the same information. So basically, what we are looking in with CoT data is at one side is the flips in market positioning. When a certain group flips from net long to net short and vice versa, we are looking at the extreme positioning, and we have here several ways of extracting that information from extreme positioning, looking at the oscillator, looking at the ratio, and so on. This has historically been also used in identifying important market reversals. And then we have the changes in open interest, which are used to determine the strength of trend. These will be the three aspects that we look for. There are no hard rules, no hard and fast rules when it comes to interpreting the effect of any group has on the futures markets. There are other people that are much more knowledgeable than myself on CoT data. There are entire books written about it. So there is really a domain by itself where you can extract a lot of information, and even strategies are based on CoT data. So for those interested, this may be a way to start looking at the data. This is one of the few collections of widgets that offers such a variety of processing that information. We may look into adding more studies to the future. If you have any needs of visualizing the information a different way, just let us know. Here on the right side column, there is still another way to visualize the CoT data. In this case, you may choose the group, the commercial, non-commercial, or non-reportables, and the markets. And you have a bar chart where you can see where currently there is more extreme positioning in a comparative way. You may build each widget. You can open it as many times as you want, and properly inserting the settings that you may need. This is an example. You have the same widget applied for FX. We have here only currency futures. Here we have commodities together with a dollar index, and here we have grouped equities, bonds, and also the volatility, the VIX futures into one widget. Okay. All right. I think that's more or less what we had to say. If there are more questions which I may have overlooked. Can we have more webinar on CoT? Yes, for sure. We may have a webinar which takes a more analytical approach. Once the basics here is explained, and you may have access to it on the recorded basis, we may do a webinar just for analytical purposes, of course. Mm-hmm. Okay. We update it on Friday, so as soon as the data comes out, it's updated. So from during the weekend, you should have the data already processed for that week. And the first report, which is produced by FXstudies, comes on Monday. This one is from last Monday. If you just go here in previous entries, you may look into the historic. You see, this is just recently started in April. So maybe later today, you can see the the report for this week. The other reports are produced during the week. This one, for example, was produced today. So this week was the first one to be published by Global FX, and you may consult the history for each of them at the bottom of the report, or simply subscribe to the RSS feed, or just follow the. If you click on follow the author, you will receive per email and in your digest the reports that you choose. By the way, you can see the watch list here. Also below the FXstudies, this is the watch list, and you may manage your subscriptions. Here are the people that I follow, so you can add the people that you follow here, the contributors, and you may choose if you want to receive the digest in a daily or periodicity or session with each session or at the end of the week. Okay, so this is one way you can receive the information if you don't want to look to search on the site. Okay, so thank you very much for your attention and participation, and hope you enjoy the information. And if any questions, just drop us an email. Any suggestions on with further studies, let us know. Thank you, and bye bye. Have a nice week.